22nd September 2023, Friday, MAO with Kel, right? Now, hedge funds are attacking the US Treasuries heavily. This is something that we all know, but how bad it is, well, I can only say right now, Bill Ackman is definitely laughing to the bank as the US Treasuries continue to fall. The Federal Reserve is losing credibilities. All right, let me tell you more in detail. Let's go, all right? Now, before that as well, disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. Now, the 10-year yield has hit the highest level since 2007. This is not a joking matter because we all know that the 10-year yield, right, the last time we saw this high was back in 08, 09. That's before the crisis. And of course, that means that, right, the treasuries are down because yield and treasury prices, they got inverted. So now the thing is this, we are so near to this level right now, 4.5, which in fact it was hit this last night. So this is definitely going to cause the mortgages to cross 8%. Now think about this. If your home mortgage is at 8%, it's crazy because that is really 1/10 of your entire valuation of your house. I mean, that's going to pay a lot of money. And for people paying these mortgages, they will get into serious trouble. And talk about the car loan rental, the car loan loans, in fact, it will go to 10%. So this is really a bad thing to happen. And the thing is this, you can see right now, the Financial Times says that the hedge funds are betting could spike a turmoil in the US Treasuries. Now, take a look over here since 1928 to all the way to 2023. Now, take a look over the history from 1928 all the way to today, 2023. There's not a single time whereby we have the treasuries down back to back for 3 years in a row. Now, of course, we are still about 3 months away, but seriously, guys, this is really bad. 2021 down 4.4%, 2022 down by 17.8%, and now it's down by 1.5%. This is really something that you've not seen before in the US history. So remember, I shared with you guys regarding about this Bill Ackman. I said that he shorted in size with the 30 years US Treasuries, and back then itself, many people were saying that this is nonsense. But remember, I told you guys, this guy knows his stuff very well, and I supported his view because I believe that the Federal Reserve will increase interest rate, and indeed, it really happened. So now the thing is this, I talk about the US crude will be one of the biggest inflation, the big elephant in the inflation room. And I also mentioned that, right, the US stock market will drop by another 5 to 10%, and it's all manifesting right now. So all these speaks for itself, and that tells you why that we believe that this downside itself have further downside room to go, because you can see in November itself, that was last year, that was where the Treasury hit 92.2. Remember when it was trading somewhere around this point, I was telling you guys this, I say that most likely the market will be going down to break the low that happened back in November. And many people were just laughing away, saying that it is impossible, it will not happen, but it's happening right now. And I said that when this happened itself, the Dow Jones will come down, and you see the Dow Jones really came off. So all these speak for itself because all my videos are all archived on YouTube. You can't run away from this. So you can see, I tell you guys that if the US 10-year yield continue to go higher, then the Dow will come down, and it's really following. So the thing is this, the Federal Reserve right now say that, okay, there's no rate hike in September, but likely there will be one more, at least one more down the road. And of course, the closest FOMC will be in November. So some people say that, look, even let's say the Federal Reserve don't hike interest rate continuously, but if they stay the rate high, would it cause a problem? Of course, that means that the mortgages would, the high mortgages will be there, and of course the car loans will all be there. People are going to pay through their nose for this, and of course, what will happen in the stock market? There will be profit taking. So if you look at it right now, the 3 months yields at 5.45%, and the 10-year yields at 4.5%. The spread itself is still very wide, although it's lessening right now, but it's still there. So that is another big concern. So that's the reason why you can see that yesterday when the yield goes up, the stock market basically fell. All right, this is something that you must understand. So you look at it right now, if you use the latest numbers for 30 years mortgage, you'd pay 8% itself. Now this is per annum. This is madness. Give you an example. Let's say a house is worth $500,000 US. okay, for the mortgage. So 8% is $40,000 divided by 12. You're going to pay at least $3,000 every single month. Now, that is almost the pay of regular people. So you can imagine that this is crazy because it's just 3 years ago, this number is at 2 to 3%. Now it's at 8%. That is a real big jump over here. So that's why the stock market continued to sell. All right, the stock market continued to sell last night, and it's not a joking matter. And in fact itself, right, we're telling people this is going to continue. Remember, we tell you that, right, the Dow Jones is going to fall. We believe that, and we also mentioned to you that the NASDAQ is going to pull down further. Going to come down to this 14,400 valuation level. And truth be told, yesterday the NASDAQ came down all the way to 14,694. We're just not too far away. Sorry, my bad, that's 14,600. Yeah, so we are very, very near to the target level of 14,600, guys. This is really why you need to watch the MAO, because we really give you really updated stuff. And of course, do we make profit from the market? Yes, indeed. This is one student itself. Within a week, he had profited easily $11,000 just trading the market and watching the MAO itself. Now, is the Federal Reserve even be trustable? Now, let's take a look here first. Now, first of all, you must understand that right now, people are betting that the Federal Reserve can be trusted because only 26% of the people believe that the Federal Reserve is going to hike interest rate. Well, it was just 28.9 yesterday. So the thing is this, while there's a lot of fear ongoing, Wall Street doesn't believe that the Federal Reserve is going to hike interest rate. That's the worst thing to happen. So if you don't believe itself, let's do it this way. If they don't believe, and they believe that there will be no rate hike, and let's say Federal Reserve decided to hike interest rate, this is going to slap the market so hard because that will freak the market out. But on the converse note, if the market really expect that Federal Reserve doesn't increase interest rate and the Federal Reserve buckle on that itself, then the trust, the credibility is all gone. This is really insane. So Nick from the Wall Street Journal says, Powell used the word proceed carefully 6 times during Wednesday news conference, a sign of the heightened caution about lifting rate. Now, for Nick to come up with this statement, that means that he's actually telling us indirectly, Federal Reserve may say things, but they may not react the same way. Because we all know Nick is actually the direct or indirect mouthpiece for the Federal Reserve. So that's the reason why right now, right, the fear factor is coming in and traders are very worried right now what will happen next. So let's take a look at the fear and greed indicator. You can see right now in the timeline, right, we came down all the way from here. Remember, in July itself, when I was calling for sell, when the indicator was at extreme greed level, I said that it will come back down, and it came. So now the thing is this, until we see 25, because the last time we saw 25, 20 area, that was where the market bottom, right? So if you don't see this point coming in, it's kind of tough. And remember, I showed you this. I said that when the market is too far away from the moving average, eventually it will come down and meet, and indeed it have met. So based on what we saw in the past, the market will actually open up a bit more downside, okay, a bit more downside, yeah, before any recovery. Because now the stock price strength is still considered strong, even though it's at a fear level, but it's still very far away from where we saw in 2022 October period. And of course, the stock price breadth is down, but it's not that point that you can buy. Put and call option is down, but again, it's not to the point that you can buy. The volatility is increasing. Expected the VIX have increased. For those who bought VIX, congratulations, well done. And now even the safe haven demand itself for the bond market is showing sideways movement, and the junk bonds are unmoving. So overall, all this speak for itself that the downside may not be over. We may see a temporary recovery, but it's not going to be like, the bottom yet. So you can see right now, right, with the Federal Reserve losing credibility, obviously what you expect to see, right, the permanent job losses have accelerated recently. You can see this coming up very fast, and every time when this permanent job losses increase in a very rapid pace, we can see that recession is always nearby. It's not too far away, and I believe that this is going to happen very, very soon. So guys, if you do not protect yourself and get yourself some skill set and stuff, you may lose your job in the coming months. And of course, let's look at what happened since 2020. Now, in March 2020, right, inflation won't be a problem, say the Federal Reserve, but of course, we all know that it became a big issue. In January 2021, that was about 1 year later, inflation is transitory, which they keep on reminding us, but it's pure BS because we all know that inflation continued to shoot up, right? Then by September 2021, they tell us that the interest rate won't rise until 2024. But yet in January 2022 itself, recession is needed to lower inflation. Oh gosh. And then this inflation began in December 2022. And now they're telling us that a soft landing, instead of a hard landing, is possible. And banking system is stable in March 2023, but the debt was whereby SVB and all the banks got in serious trouble before Federal Reserve came and saved the day. And now they tell us that the inflation won't hit 2% until 2025. Now, seriously, not a single statement was correct. Has the federal lost its credibility? I think they had. So now that's the reason why now the bankruptcy filing has moved up recently. Now, the last time we saw this was back in the COVID period, whereby people lose their job. We understand that. That's pretty understandable. Then we have the financial crisis back in 08, 09. So where are we right now? Oh gosh, we are back to the same level. And when happened in 09, we have recession. In 2021, we have recession. So what do you think will happen for now? Obviously, it's recession. So the runaway for more tightening looks limited. All right, we can see right now the 10-year Treasury yield, proxy to the financial condition, less the real natural rate. All these shows that we are at a very high level. And of course, the last time we saw this, we do see the recession coming in. So overall itself, no matter how you look at it, we all know that if the Federal Reserve really decide to pause interest rate, this will send a big wave of selling to the market. Because why? Let's look back what happened in 08, 09. Now remember, at the very start in 08, 09, PNB Paribas halt redemption on 2 investment funds. Familiar? Yes, very familiar. Then they basically filed bankruptcy. Federal Reserve came in and said that the downside risk to growth has increased substantially. Then after that, the market rebounded and it went to all-time high. So at the point itself, everybody believed that, oh, the worst is over. Okay. Then the strange thing is this. While the market is going up itself, the Federal Reserve came in to drop interest rate. Oh, that was cool. Now that brought the market up. But look at it. The market took the point to sell instead. And the worst thing is this, when they start to reduce the interest rate by another 75 basis point, the market initially hit that, recovered, which created a so-called a bull trap where A and B Financial filed bankruptcy. And that was the start of the selling wave. Then IndyMac came in, filed bankruptcy. The Federal Reserve said they'll keep the interest at 2%, which is pure BS again. Merrill Lynch, Silver State, International Group, Lehman Brothers, all fall in. And then, wow, there's a capitulation that would happen. So guys, don't you realize that whatever happened back in 08, 09 is something repeatedly happening, repeating itself right now? This is actually going to be a very big one. And I can tell you this, guys, if you don't make yourself ready for this, you're going to miss out a lot of big movement, all right? So now what's today? Now what we have for today is that the market stays above 34,069 for the Dow Jones, and based on our indicator, the pivot one is below, right? So normally when the market stays above OP and above pivot one, there will be some recovery, and you can see the market is up by almost 100 points from where it opens today. And very important, our KCX tell us that there's some bottoming effect at the moment right now, and it seemingly is about 34,100 area. So with all this information, I kind of suspect today there may be some recovery first. But if the selling to come in, you notice the last few days, it always comes in the last 2 hours, and that actually speaks for itself because it's more like a pump and dump exercise by the boys. And to me, it's all right. The market can really go down below 33,000 in the near term. All right, guys, there's something for you. Ponder, like, subscribe, and share my video to all your friends. Take care. Have a great day. Bye-bye.